for this PSYOPs operation, but if we fast forward a little, each time they are rinsed out, it improves the market structure. It resets the bearish options bet that were made 12 months ago or more and makes it more attractive to exchange depreciating dollars for physical gold.
And Andrew, although we're seeing some strange action in silver, it's my favorite topic. What do you see here with silver?
Yeah, Shane, that's good. I knew you'd bring up silver, and it's important. Well, if one took the price action of silver at face value, one would miss the fact that unbacked silver bets into a red-hot commodity sector are particularly dangerous for these same actors' bets against silver. Let's face it, it's one of the most undervalued commodities on the planet Earth. So insider short cover is limited again to what they can rinse without exposing themselves to delivery obligations into options expiry next Monday the 28th. And this limits the downside as paper discounts will be exchanged for physical delivery. So that's basically what we're saying. And as I say, the OPEX levels still indicate the sweet spot is just under 25 and resistance at 26. And in the silver futures and gold futures, they still want gold futures capped at 1900. But the physical shortages are coiling both gold and silver for a very strong short squeeze move higher. And we see potentially these option structures starting to get destroyed. And as we have highlighted in the past, look, we sometimes talk about the COT report, the commitment of traders report. It is focused on, it is mithered about. People say, oh, well, there's more open interest coming in, therefore we're going to get a smash. It's going to go all the way to zero. Look, you cannot accept this at face value without assessing the relationship to Basel III compliant gold positions and to undeliverable spot silver positions increasingly vulnerable to an EFP blowup. This is going to end up wrong-footing blinkered Comex-centric traders. So yes, position concentration becomes a concern, but pushing the paper price too low will backfire as Comex price exchanged for physical flows will be sought for delivery, as we say, outside of these flywheels. So bottom line, historical long-standing leveraged derivative bets that rely on settling gold and silver credit positions with offset credit positions are facing unanticipated physical settlements. These bets were made prior to this tectonic FX market shift into a physically settled commodity-based currency setup. So really finally, with a large percentage of gold and silver shorts that hedged in the over-the-counter market, when spun inside the GLD and SLV flywheels, the ETF flywheels, these unallocated gold and silver credit positions are equally undeliverable. Now, the blowback on these positions comes when the resulting price dilution is crystallized, arbitraged outside the casino in the deliverable spot FX gold and silver markets. Backwardations will be arbitraged into such a tight physical market. Of course they will. Or the EFPs will force liquidity providers to deliver on the longs they're hedging on the Comex. That didn't work out well for them last time, and was one of the primary reasons that Basel III NSFR standards were implemented in the first place. So as far as silver is concerned, while not yet NSFR compliant, all commodities posing a risk to the balance sheet of the too big to fail taxpayer-supported banks will have to become compliant. Just look at what happened to nickel just a week or so ago. And with this, with the silver positions now severely offside, much like Citi had to short cover the short oil positions that they were on the wrong side of, so will they, the Bank of America, JP Morgan, have to short cover or try and get their leases back that have been short sold before we have an LME type default where you don't get your position covered. Look, it's the portion of these bets that are not physically directly hedged with physical that is going to blow up. So all I can say is, to finish up here, have you got physical? How much physical? Robert Kiyosaki said on our interview, physical, physical, physical. The only question he wanted to know is how much physical have you got?
Well, there you have it. Thank you so much, Andrew Maguire. I knew this was going to be a fascinating episode of Talking Gold. And remember, everyone out there, buy physical and understand the difference between what Andy affectionately calls the casino paper gold and silver markets and the actual physical gold and silver markets. They are not the same. Don't be fooled. And